favorite episodes of the week, Friday edition of VC TV. What does it mean? Why is it so important? Why is it so exciting? Well, every single day here on VC TV, we talk about different technologies, industries, and regions around the world, how they all work together, what's happening, what's not happening, and where are things going, or maybe not. And as we talk about that, we build up to this show. This show, we bring the best minds in the world as investors to share their insights, not just on those technologies, not just on what they're seeing, but what's happening in venture capital in general. So that if you are an investor, you get to see the insights of what we're seeing as well. Maybe like-mindedness, maybe opportunities, whatever it may be. On the other side, if you're an entrepreneur, guess what? You get a free ticket into all of our heads. As investors, you can understand how we think, why we ask the questions. We're going to cover it all. Today, we're going to talk about what's happening globally in venture capital. We're going to talk a little bit about raising capital as both an investor and as an entrepreneur, because guess what? Investors have to raise just as entrepreneurs, and it's not easy. We both struggle. It's a journey for everybody. We're going to talk about diligence. We're going to talk about everything in between to trends, locally and globally. So get ready. And before we get started, thank you, our audience, for joining. At any point, if you like what you hear, make sure you click the subscribe button, give us a thumbs up. Feel free to reach out, tell us more of what you would like to see here on VC TV, or if you yourself would like to be on. Investors, we'd love to have you share your thoughts and insights like we're going to today. And entrepreneurs, feel free to reach out to also get a chance to pitch and to talk to us as investors firsthand as well. Also, thank you to Elena and to the entire LA Token team for helping to bring VC TV possible to your screen, to your devices, anywhere in the world. And any question, audience, if you have a question, anytime you have a question, feel free to drop it in the Q&A box, in the chat box. We'll do our best to ask it in real time. If not, guess what? As we talked about on Wednesday's episode, we're always available on social media. We're all connected. You can get a hold of all of us at any time. And at the end of the show, we'll give you all of that information as well. All right. Now, let's get started because we got an awesome group of investors here to talk today and a lot to share. So first and foremost, because it is a great holiday, which we talked about pre-show, I want to welcome first and foremost a good friend who's been on this show a few times, but today he's starting. Mohammed, welcome back to the show, my friend. A little introduction, a little background. You got a few extra minutes. It's a holiday on your side. Welcome to the show. It's all you.
Thank you so much, Kyle. And I'm glad to be here with like-minded people. And congratulations to all of you. Today is a holiday, Al-Adha holiday. And we've been celebrating with our families through Zoom and whatnot. So I'm working as a general manager at Rancher, Saudi Arabia, and I've been working with in the SME sector for a while right now. And I can help those who are in the SME sector in the MENA region. Thank you.
You're on mute, Kyle. You're on mute.
Yeah.
Difficulties. Whoop.
Kyle, you're on mute.
Can we hear me now?
Yes.
Yes.
Now you're on mute again.
Yeah.
All right.
Maybe this is my chance to say something about our today's topic. Today's topic, we are talking about the investment in the new reality. And right now, I can say most companies, whether small or large, are seeking investment or are seeking to overcome this current situation. We've seen companies such as Facebook, Boeing, and other large internationals do think of this as a new strategy to build their company within this current situation. Right now, the pandemic is more or less not I think as before, as 3 months ago, where we had the shock and so on, but we might experience something a little bit less severe in the upcoming months. But hopefully we are more prepared than the last one, because the last one was a little bit of a shock.
Absolutely. And thank you so much, Mohammed, for picking that up. Technology. Sometimes it works for us. Sometimes it works against us. I was on the latter of that situation, but thank you for the insight as well. And Gary, my co-host, one of two who is back on the show this week. It's a pleasure to have you back. The master of AI, the electricity of our future. A little introduction and background on yourself for those who may not know you.
Yeah, so my name's Gary Fowler. Thanks, Kyle. I really appreciate it. And I enjoy being on the show with you and Noble. And so I'm a serial entrepreneur. I've done 15 companies. I'm also an investor. My largest exit, as I've said many times, I was on the original management team of Click Software, was sold in August for $1.35 billion. I also am the co-founder of Yva, one of the top 10 AI HR tech companies. And I just love AI. Like I said, many, many times I've said, AI is the new electricity. It really permeates everything that we do. And as I said, I'm an investor. I have GSD, Get Shit Done Venture Studios. We curate incredible AI companies. And our goal is literally to continue to create unicorns. And I love doing it. We take operational roles in those companies.
And we will talk about AI today. As Gary said, it does play such a foundational role. And Mohammed as well, talking about lessons learned and how we don't want to repeat the same mistakes going forward as things continue to shape and shift. So these are two very important things to keep in mind during today's episode, as there'll be common themes. But I know we've got a few more that are going to be coming up. As William, welcome back to the show as well. It's a pleasure having you earlier this week and last week as well. If you could, just a little intro and background on yourself.
Hi, good evening, ladies and gentlemen. I'm William Du from Engineers House. I'm based in Kuala Lumpur. All right, we are in financial services. We raise funds. We also invest. Okay, so sometimes I wear the head of buy side. Sometimes I wear the head of sell side. Okay, so this is a very interesting week. I'll share a bit more about the activities that we have done this week. Okay, so yeah, happy to share my ideas and also the plans for the next 3 months.
Wonderful. Excited to hear what that news is teased about. Henry, welcome to the show. First timer here on my and Elena's show on VCTV, or Elena, Gary, Noble, Kyle show. But nonetheless, all jokes aside, welcome to the VCTV. We're a pleasure to have you. A little introduction and background on yourself.
Thanks, Kyle. Yeah, my name is Henry. I'm from California, US. Our firm is based in St. Louis and Chicago and LA now. We invest through our accelerator program, cohort-based 12-week cohorts, and our seed fund, generally in the seed, pre-seed, all the way up to Series A stages. We've invested in 130 companies to date, and are still investing and continuing to invest and seek out bright founders. So thanks for having me on the show.
Awesome. Real quick, a little side question. What industries do you focus on?
We're agnostic for the most part, outside of bio and pharma.
Oh, okay. All right. Excited to hear more about that. Saeed, welcome to the show as well. It's a pleasure to see you back. A little intro and a little background on yourself.
Thanks, Kyle. So my day job is building a health company, digital health, which is obviously a very busy time. We're doing a lot on the corona test, insurance, and stuff like that. We have around 8 million, serving 8 million customers. But my other hat that I wear is an investor. So I invested around 570 companies all over the world, quite a few from Silicon Valley. But of course, I mean, I work in Africa, Middle East, Asia. So there are many from Latin, Africa, and other places. I mean, if you want me to drop a name, I mean, there are many. So I did around, of course, so if you invest 570, there would be quite a few unicorns. I had around 12 unicorns in the portfolio. And also I have started running a syndicate now. So I have around 500 people in part of my group where we invest jointly. But that has happening with this work from home thing. So the last 3 months, this whole syndicate thing came up.
Wow. All right, we are definitely going to open that box up. I want to learn a little bit more about that, as I'm sure our audience does. There's a lot of questions, guys. We have a lot of people that join in here, from investors to endowments and family offices to first-time angels to those over-experienced entrepreneurs and first-time. So all of your experience today, I think, is going to be awesome for our audience. And last but not least, my other co-host, Noble. Welcome back, a man from the stars who's come down to grace us with his presence. If you can, a little intro, a little background for everyone out there.
Hey, hi, Kyle. Hi, everybody. My name is Noble Dracone. I'm the managing partner of Dracone Capital Partners. I've been in the space for about 26 years in multiple iterations. Early on, we were in the conversion from pagers to digital cell phones back in the, literally, I can say the turn of the century, from 1998 to 2000. We had a lot of successful deals at that time, which we were happy to be a part of. Since then, we've been very aggressive in working with M Accelerator, which is in Los Angeles, and we're in the middle of a venture fund, $40 million venture fund, and we've kind of built a mandate to help 300 startups pre-seed, seed, go through both our 8-week, 12-week, and 6-month programs, and just kind of push them forward. A lot of our focus is in augmented reality and virtual reality. I hold patents in that space personally. And so we've been very aggressive in the last 4.5, 5 years, developing both on the gaming side, as well as we had a talk yesterday, and the med tech side with haptic clothing and physical augmented reality. So happy to be here, Kyle.
Wonderful. And for those who didn't tune in yesterday or the day before, when we were talking a little bit about gaming and also bio and med tech, definitely recommend checking out both those episodes. We got real deep into what's happening on the bio, pharmaceutical, and even ag tech side. And then earlier in the week, talked a little bit about the gaming space as well. So definitely check out those as a shameless plug on my part from VCTV. Now, gentlemen, before we get into each of your respected areas, because I think there's a lot to talk about, from syndicates to raising funds to also the accelerators and incubators that you guys run as well, as they are very supportive to companies. I want to talk about generally what's happening. Mohammed kicked us off here in some of the things that he saw of lessons learned, but I want to go kind of on a regional basis and pick your brain as to what you're seeing. When we are typically in a situation of raising capital, we're usually focused very locally on investors, raising from those around us. Some companies go and expand that a little bit more outside of their local area, to even in some cases going global through syndicates, where they may or may not know who's investing in the company. But with where things are today, as we've talked about, things are so digitized. We're so connected. I mean, here we are in probably 6 different countries, maybe 5 at this point around the world, but we're all here. We're all here talking. We're all here sharing. We could all do an investment together if we wanted to, which provides a very unique opportunity for the investors that are listening. So with each of us, I'd love to hear your area, your insights of what's happening on the ground in your area around investments and venture capital. Mohammed, I'm going to start with you again, since you kicked us off. What are you seeing happen, not just around the world, macro, but coming down a level? What are you seeing happen in the Middle East right now around venture capital, the trends, the activity or lack thereof, which I don't think is the case, but.
Yeah, thank you so much. Well, actually, I'm glad you asked this question because surprisingly, this half year, 2020, faces or experiences an increase in investment with regard to last year, the accumulated investment for last year as a whole. So this is kind of surprising, especially in the region here. We've seen $95 million just put into 45 deals in the first half of this year. So if we see the deals, the kind of companies that are invested in, they are in the fintech, they are in the logistics, the edutech, and of course the e-commerce. So it's kind of focusing or shaped around the current usage of the internet, or the people, how they put their money and how they think that things are more valuable than before. So those things are seen more jump into the number of deals as well as the magnitude. So, for example, I've written an article a few days ago about a Platonic versus Aristotelian entrepreneur, where I compared the realist versus the idealist entrepreneur. And one investor talked to me saying that this applies to investors more than entrepreneurs, which is sometimes entrepreneurs might be risk averse more than risk takers, which is the difference between the idealist and the realist. So I think what we have seen, especially the last month, where the coming back of the entrepreneurs to the real market, to the people, trying to make their market share bigger, is that they are trying to accommodate more into technology and getting more what they can do with AI and with the fourth industrial revolution, such as the big data and so on, which is the real key right now into the next stage.
And so are you seeing more activity? With that being said, when we talked about, or as you mentioned, in just Industry 4.0, as we talked a bit about that earlier in the week as well, are you seeing more at the infrastructure level, where governments and corporations are getting involved? Or are you seeing more investments happening by entrepreneurs looking to integrate into those companies as well?
Actually both. I can say that there is some credit to some governmental entities, such as the Saudi Venture Capital, where they are leading the investment. They are trying to talk to angel investors and doing or investing with them on one-on-one basis. So that's really good. That's helping the individual investors who haven't done investments before, who didn't go to the length of the due diligence and trying a couple of exits. So those investors, who are a lot actually, they are trying to enter the market with the help of the Saudi venture capitalists.
That's a good entry point. I know that we've seen that happen in a few other places around the world. And for those that are listening and tuning in, this is a great opportunity if you want to learn and you want to get a chance to really see some opportunistic deal flow outside of working with a group like we are lucky enough to have here. What Mohammed mentioned is also a good place to start as well. And William, I'm gonna wait on you just for a minute because you got big news to tease. So I'm gonna hold off on that for a second. Saeed, I want to come to you next. I mean, you've done so many investments, and we're going to get into those. But what are you seeing in terms of your activities around, whether it be Africa, whether it be Asia? What are you seeing as kind of those trends and activities around the general investment scene right now, as well?
So a couple of things that are happening, and I'm seeing this trend across the world, irrespective of emerging markets or developed markets. So first is that there are a couple of industries which have clearly benefited from this whole COVID-19 thing. We all know those, right? So those industries are attracting a lot of investments. It is one of those gold rush that there is a view that this will continue, this remote work, this distributed workforce. So I've seen companies which are coming up, different versions of, increasing productivity of distributed workforce and stuff like that. So they're getting a lot of investments. The whole e-commerce space, which is, if you look at the data, e-commerce as a percentage of retail used to be 10% in US in the last 10 years, and it's gone to 20% in the last 8 weeks. So clearly the e-commerce has gone up. And then of course, we all know the examples of Zoom and all those things, right? So any companies that have been doing well and has this tailwind are getting a lot of investments, and they are also doing opportunistic raises. So I invested in a company recently. We just raised a good chunk because they are now going to acquisition mode, and they see a lot of weaker players that they can buy now. So that's happening. The second thing that I think is very interesting, which I thought would change, but I'm not seeing much changes in seed valuation. So seed stage valuation has broadly remained flat. The whole hypothesis had been that in a crisis like this, the seed stage valuation will come down, but I didn't have, I didn't see much changes. And that's probably because a lot of the VCs have raised so much funds before going to the crisis, and they're sitting on so much dry powder that they really need to invest. And if you look at the VC cycle, they have this 10-year cycle. They commit, they need to deploy within the next 2-3 years. So they can't wait 1 year on their side, because that will impact their whole IRR and all this stuff, right? So they need to invest, and they're going in, and the deals they like, they're not caring about valuation. So that's the second thing. The third thing which I'm saying is there have been, it's true that there have been down rounds, and I have been, within my portfolio, I've seen a couple of down rounds, but those are companies that were already valued at unicorn level. And now they were very cash hungry, and they needed to raise. And of course, the investors are now sort of calling the shots, and they reduce the valuation, stuff like that. So these are broadly three things that we are seeing as a trend emerging. And whether it's Africa, whether it's Middle East, whether it's Asia or US, I think it's broadly same. The idea that companies are not getting funding is not correct. People are writing checks. Through my syndicate, I did 14 investments in the last 3 months. So, people are writing checks. They are, they are very much in the game. And I think the old notion that, VCs will be standing on the sideline, see this whole thing play out and then come in is not happening this time.
14 in 3 months. Let's just focus on that for a second. That's phenomenal. I mean, that's what, 1.1 a week? I mean, that's great. That's amazing. Congratulations on that. I want to come back to you on the diligence side of that, because that's a lot to get done in 1 week. But I think you're bringing up some very good points as well. As when things happened in the past 6 months, there were points where people had to stop and think, evaluate, and reassess. That happens in any time of crisis, any time of events, right? But long term, as you mentioned, and I'm glad you did, and we have all as well on previous episodes recently, is as investors, we have to, especially if we have a fund attached, deploy capital. So we can't just sit there. If the world is ending and we're sitting on capital, the world's ending, because there's nowhere to deploy it. But if the world's not ending and we have capital, we have to deploy it. It's very simple. And I thank you, Saeed, for mentioning that. That's a great point to bring up, and think something that I think people tend to forget or is not necessarily talked about as much. Go ahead.
Yeah, if I may add 2 points. One is that this is actually a very good time for investments. There are 2 reasons. One is, the companies that are raising funds. So one of the first questions that we ask is that what would be the runway after this raise? And the guys who are raising now, they usually have 12 to 18 months, some cases 2 years. So we know these, and we are hoping within a year or 2, the things will be, where we are, the vaccines and everything. So that's one. Second, of course, we all know this, but these are the times where the real entrepreneur come in to build businesses, because you're not talking about tourists here, right? You're talking about people who are really into this. They know the challenges, and for companies like I invested in a company which is doing a Series A. They are into all this video. They're sort of building the Pinterest for India, and their usage has gone up. The acquisition cost is almost nil, because a lot of people are sitting around going into this app. So CAC has gone down significantly. The cost of the staff salary has pretty much flat or has gone down. So it's a very good time to build a business also.
No, that's a great point. And I think we're all shaking our heads agreeing with that. So thank you very much. Henry, I'd like to come to you next. I mean, you're here along with Noble, Gary, and myself in the US, and would love to just hear your perspective on what you're seeing happening around venture capital in general in the US, or if you're seeing anything else globally as well. But you're also based in Los Angeles, where it's one of the top cities, I think number 3 here in the United States in terms of venture capital right now. I might be wrong on that stat, but I'm pretty sure I'm right, maybe 4th. So yeah, what are you seeing in terms of your views on the world of venture capital here in the US, Los Angeles, and otherwise?
Yeah, I'd say I want to preface it by saying most of our investments are based in the Midwest, given our firm's headquarters. But we've seen a less deal activity overall in terms of volume, perhaps the same. I think there was a lot of uncertainty in the beginning. So a lot of VCs were hesitant on deploying capital and going over the process again for how to make investments without with a different due diligence process, not meeting the founder in person, not visiting their site, et cetera. So that took some revamping. But otherwise, we've seen, at least in our term sheets, some additional protective provisions in case of a downward scenario. But other than that, there's no 2-3x participation preference that at least I've seen. So it's a bit more advantageous, but for investors, but it's most of I'd say the downtick in new deals is from VCs putting a lot of their cash into existing portfolio companies. At least for us, that was the case.
Noble, to you, I know you're also working with a pretty notable accelerator in the LA area, but in general, we've talked a lot about what's happening here in the US. Would love to hear your perspective as well.
So we're a little bit of a different type of accelerator. My partner in the accelerator, Alessandro Mariantoni, he's originally from Italy. And so from day one, we've already had international exposure. About 60 to 70% of the cohorts that come through our program are either from either Europe or Asia. And so we have a different kind of backdrop in what we're involved in. We've been doing a lot of, I think I mentioned it in the past, we added another $5 million raised to one of the contactless pizza delivery companies that we're working with, which is starting out in Texas, putting kiosks that deliver hot and ready pizza from a machine. And it's a vertical that we've been really happy to be involved with, but they're originally based out, it's called Basil Street. They're based out of Italy. We had $10 million raise right during the beginning of COVID, another $5 million added. And then now we're in expansion with that particular company. The biggest disruption that we've had is that we were planning to set up a satellite or secondary venture studio in Venice. They had a whole location for us set up. And as we know, COVID hit Italy very aggressively. And then we also have sister relationships both in South Korea and in China, places that we hope to kind of go back to cultivate more of our cohorts. The beauty of this, though, is that we had already had for Q4 to be online and to start expanding everything that we're doing with the international audience so that they didn't have to travel as much, and to really develop our alumni base. I think we have like over 600 people in the alumni database that have either come through or connected through us, with about 200 plus different founders who've come through. So right now, this has just accelerated that. So we've been bringing in more deals than we expected, just because we're in a global focus. We also, to kind of something that you brought up earlier about how governments are interacting, the ecosystem for venture capital is different in Europe than it is in the United States. And because of that, we find that the European government is a lot more hands-on in being co-participants with founders and assisting them. And so there's a lot of programs that have actually accelerated to assist founders to kind of weather the storm. So there's almost like this joint venture, something that I was new to until I started working with Alessandro, where the government is really working with the angel investors, accelerators to assist a lot of these companies to get off the ground into their MVP. So, I think this year we're on track to still have about 800 and something, like 820, 830 pitch decks presented to join our cohorts. And we've been sifting through, and we've distilled down, the top 250 that we like, even coming into Q3 and Q4. So, there's a lot of, as I said earlier, there's a lot of opportunity. And at the same time, new things have opened up. The reason why we're investors is because, I've said it before, we're futurists. We look towards not what is today, but what's 5 years from now, 10 years from now, with the intent to invest at this moment. The reason why I stay in augmented reality and virtual reality is the same reason. People thought it was ahead of its time, but now there's contacts, lenses coming out that'll be our heads-up displays. So, the reality is we've got a lot of deal flow. My database of investors are constantly in search of new opportunities. We're attached to a lot of family offices. A lot of them are sitting on dry powder. You know, we're in the U.S., so a lot of them have been a little bit more reticent to activate. But at the same time, when they've seen opportunities that fit their overall thesis, they've pushed the button immediately. There's been no hesitation because they're all sitting on cash, and they've got to really use Q3 and Q4 to make up for the stagnation that's happened in Q1 and Q2. So they're really in an aggressive drive to, you know, find some outlier opportunities. So, you know, we're in the middle of that. And I think maybe because, you know, we're in Los Angeles and there's been a drive from San Francisco to create the secondary, you know, ecosystem here in Los Angeles for the last several years. So I think we're maybe in a different intersection than what's going on in other places. But yeah, we've been really happy to see the opportunities and the flow.
That's, I mean, I couldn't agree more. And also just further echo some of the things that you said. I mean, you know, seeing that kind of deal flow as an accelerator for someone who's run one and mentored at many others, that's a pretty amazing statistic, which also goes to show the value of how, you know, accelerator and incubator programs can really bring in all times. And also as companies, as Saeed said, it's a great time to start a company. So, I mean, you know, take advantage of the opportunity and work with great groups who can give you further resources, because, you know, fuel to the fire can really take you off in some of these new industries, and leveraging those relationships, as Noble, you did with the pizza company you were mentioning. I mean, that's huge opportunity for them to come into a new market and just get going like that. And I know Mohammed has done some things similar with his companies as well. And Gary, to you work both on the U.S. coast to coast. You know, we've been talking with so many people on different episodes around different technologies. You've done a lot in Russia and just greater Europe and Asia as well. What are you seeing as well around trends? I mean, we've heard a lot, but I know there's more still to be had.
Yeah, so, you know, I started the first accelerator in Russia, Skolkovo Startup Academy. I co-founded it. I also started the #1 corporate private accelerator today. I was one of the co-founders at GVA LaunchGurus. And what I've seen is there's a new model. It's really a 3-step model. So what are the kind of things that all these startups? So I did early stage work with Bob Dorfin, Steve Blank. Bob was the dean of my school. Guy Kawasaki came over. I mean, the name brand recognition. But here's the thing. So startup 1.0, we go through acceleration. Startup 2.0, we look at regional domination, right? They're really dominating the specific market. But the challenge today is really startup 3.0, when we want to go global. And that's where we are today. So I formed GSD with my partner based on that. So my MVP was with David Yang out of Russia, one of the billionaires. I started Yva. It's about $700 million company today. We started 4 years ago. This model works. So what is missing when we go to startup 3.0? The missing part is, do we have the right team in place? Do we have offices in, for instance, Silicon Valley, because 50% of the capital is located there? Do we have all the right systems in place to be investable? Do we have the right law firm in place? Are we dealing with K&L Gates or top tier law firms? Do we have the accounting right? Does the finance look correct? And if they have artificial intelligence, and most of my portfolio are AI, does the AI that they're using make a dramatic shift in some type of paradigm? For instance, aging in place or security, et cetera. So I think that there's really a new model, this startup 3.0 model. The other thing is, the part of this whole model is being able to be regionally, sorry about that. One of my guys calling me. Regionally diverse. So you got to be decentralized. I have a lot of the companies that I work with are doing their R&D work in Belarus, Russia, Ukraine, Israel, that kind of, and I really want that to happen. So, or India, I want that kind of thing to happen because I want scale and I want the best people in the world working on it. I believe, you know, as a German say, Gestalt, the sum of the parts equal the whole, and having each one of those pieces. So the best sales and marketing, the best R&D, that's where the company becomes very exciting and investable. We look for companies, for the most part, there are exceptions, but for the most part, we have revenue generating companies. One of the companies that I'm involved with a year and a half ago had zero revenue. Last year they did 11.5 million. This year they'll do close to 20. We're looking for companies that are really rocketing forward. But the thing that they don't have the knowledge to be able to go global, and they don't have the contacts and relationships. The other thing is, you know, when you're going down through and investing, from my own perspective, I build the right kind of advisors in, and I also use the rule of threes again. So security and privacy virtually in every company that I deal with is a huge issue. So I bring somebody like Rick Orloff, who's on the board of my company and a very, very good friend of mine, who is a former chief security officer at Apple, on the board. And then I look for somebody that's really connected, you know, Stanford MBA, Harvard BA, somebody like Bill Reichert, Guy Kawasaki's partner. And then the rule of threes, I look for somebody that's completely blown a deal out and made headlines, selling a company, you know, has name brand recognition in the Valley. That's you know, door number 3 on it. And I believe if you really stack the deck, and I've done companies for 35 years. My first one I did, my very, very first one a little bit before that, but at 21, and it was wildly successful. If you stack the deck like this, it's like it's a manufacturing process for success. With the you're right. I mean, it was, Saeed was talking about it in terms of, you know, being able to go global today. It is more difficult with, or Henry was. It is more difficult with Zoom, but the companies that buy into it are the companies that are going to win, because it's not going to stop in the near term, right? We're not going to see it in the next 6 months or a year. And if you say, well, I'm going to wait till I can meet with people in person, you're at the end of the train. It's not going to happen. There won't be those kind of deals.
It's a game changer. I mean, we talk about this. We're on opposite sides of the coast right now. We talk every day. And as I mentioned and kind of joke, but seriously, I mean, we're in multiple different countries. We're all here. If I was pitching you my company, I would have that chance to get capital from great investors in 5 different locations, all with great backgrounds. When before, because I've done this, and so has our audience, and so have all of us, is before you'd be on a plane to one, on a plane to the other, trying to do a phone call here while trying to do a phone call and an email. And next thing you know, fundraising becomes what is still an exhausting process, even more exhausting.
It wasn't efficient. It's not an efficient process. I can't tell you, I live in California, right? Most of the time, I just happen to be waylaid in Palm Beach. But when in California, I can't tell you how many times I've gone to Hobie's restaurant, you know, I mean, crazy for the Southwestern wrap to have lunch with people. I think it's great. But the thing is, we need to adapt to a new reality.
Yeah. As investors, we need to adapt. As founders, game on. Game on. Whether you are in one of the greatest cities for building and for fundraising to the most underserved, underrated, you know, smallest little market in the entire world, you now, as long as you have an internet connection, you now have access like you've never had before. In cold outreach, we've talked about this. Many investors have talked and agreed to this. We talked about social media outreach, whether it be Twitter, Facebook, LinkedIn, some people's favorite network. Jason, I'm teasing you out there. Whether it be Instagram, Snapchat, TikTok, Triller, it doesn't matter. You can now get a hold of investors at any level, anywhere in the world. That changes the paradigm completely for the potential success of your company. Doesn't mean everyone's going to say yes. Doesn't mean it gets any easier. Doesn't mean it's any less efficient, but it now opens whole new opportunities. And to Gary's point, game on. You can now level up in a way that you hadn't been able to before, because we can all tell you war stories about those processes. But William, I'm coming to you last about what's happening in Asia, an area that's been flourishing, including India, that's seen billions with capital B recently in a few big companies, but a lot more in smaller companies. Asia itself has seen a surge in venture capital throughout all of Asia, whether that be not just China, but also looking at Korea to Thailand to Vietnam to Taiwan to Indonesia, and going as far south, which I'll throw in there, is Australia. Capital is going everywhere. What are you seeing in terms of trends happening in Asia? But then also you have some news to tease and to share with us. So
hi.
Okay.
Yeah, in terms of investment flow, for the past 1 month, I see a lot of deals happening, okay, whether they are private companies or public companies, okay, across various industry. Because somebody's misery is someone's gain. So there's a lot of changing of guards in terms of the business, okay. So if you look at, I can't comment too much on other regions, but in Malaysia and Singapore, there's a lot of investment happening. Okay, we are running about probably 8 deals now, and 4 of them is our client where we help them to raise funds, and 4 of them is my own partnership. Okay, so and sometimes because of the information flow is very fast nowadays, there's so many deal flows. So investors are getting more active as well. Okay, so I'm not sure about the rest, but this week seems to be a very hectic week for myself. That's why 2 days ago, I actually fell sick. I can't attend the show, right? But interestingly, on Monday, for example, I met a distressed healthcare company. Okay, healthcare is supposed to be or wellness, okay, supposed to be the booming industry for now. But for them in particular, because they are in the wellness, okay, where you involve human touch, massage, and all this. So issue number 1 is they can't open for the last 5 months, right? Issue number 2 is most of the masseurs are foreigners. All right, so they are hit, and more than 50% of the business is from tourists. All right, so they have all these working against them. Right, so their company in particular invested around probably $6.5 million US over the last 2 years, and in particular they have created a center where they bring together a few wellness company, and it just collapsed within a year because of this pandemic. Okay, but on the other hand, one of the deal that we are creating a healthcare spec, okay, and that client in particular say, hey, why not we take over that facility, because they have invested I think about 1.5 million in that center. Okay, so you can see that there's a lot of opportunities in this sector where someone is exiting because of the circumstances, but someone is actually capitalizing and leveraging on this crisis. Okay, and where they actually increase in their investments. Okay. And the second meeting I have, on a Tuesday, I actually went down to a place called Malacca. That is 2.5 hours from KL. That's the first time I went to that little town. I didn't even know that it exists. There's a little beach there. But that client that I met is in the oil and gas industry. Okay, so they are actually asking me about a Nasdaq spec. Okay. I did a virtual webinar 3 months ago, okay, on spec, okay, and out of the blue, someone just called me and they read, they know about, they saw the video, okay, which happened in April, and they called me out of the blue, and I met them. Interestingly, they actually, why they want to set up a Nasdaq spec now is they want to raise money to buy over a few refineries and oil and gas companies around the region. And they feel that this is the best time because a lot of companies are doing badly, okay? And fortunately, they have done a few business deal before the crisis, before the pandemic. And now they have some cash reserve and they have the war chest to actually move forward, okay? And of course, we have, I've seen a few AI companies. One of our deal is actually a job. I think I mentioned to Gary, but we haven't got time to speak on it. But we are finalizing a $3 million US investment for them, okay? And this round is a bit interesting because the investor seems to be more anxious and excited about the deal than the entrepreneur himself. Okay, because he just closed a 7 million Aussie deal 2 months ago. So now they are actually deploying resources to do that. But investors hear about it, they say, hey, we want to get into it. William, please help us to push the deal. So this is a bit unusual because normally investors sit back and say, okay, let's take their own sweet time. But this round, the investors are more excited than the entrepreneurs themselves. Okay, so we find it very interesting. I think I just post on the group chat. There's Invest AQ. I mentioned that Gary talked about all these issues about fundraising. Okay, we actually created that new business. Okay, it's an investor relation platform. Okay, where we will put in all the tools. Okay, to enable entrepreneurs or investors. Okay, to raise money, not just for entrepreneurs, but also for investors. Okay, so of course we will put in the analytics tools and of course AI. Okay, because we are developing a platform now. Okay, the platform will be developed by our client who does AI. Okay, so and exciting news is we decided to start a business school. So we spoke about to a few professors, okay, in the academic industry, and we feel that okay, it's the right time to push online plus offline, and the response is very, very good. Okay, so if 2 years ago or 1 year ago you talk about online education platform, nobody will bother to listen or to sit down and look at it. Okay, but 2 days ago when I come up with this idea, because it's an extension of what we did 2 years ago. But we never really do it because the timing is not right. But now we have feedback from the academicians. They want to do it, and also investors. They seem it's sort of this pandemic sort of turned the table around and say that now those business model which is usually unheard of or not normal, and now to them is we want to get into it. Do you have such deal? Okay, so like our education, the investment I mentioned, I think 2 weeks ago, our LP actually want to double the investment from 25 million US to 50 million US. Okay, so now we are finalizing the agreement, okay, and the terms. Okay, so touch wood that we are able to close by the end of Q3. Okay, so these are a lot of activities that I personally feel, okay, for the last 1 month. Okay, so so it's a good sign because as the investors and entrepreneurs are getting more focused on the discussion, everyone want to close deal faster. Okay, so a normal typical investment timeline in Malaysia is at least 6 to 12 months before they decided on a simple angel or Series A, Series B investment. And now I think it's shortened to at least probably 2 months. Okay, so everybody wants to speed up the process. So a typical process, I think now is shortened to 1/3 of the time. Okay, so people, I said,
yeah, that's a good point. That's one thing we haven't touched on yet today, and I think we're going to get to it here in just a minute, is how that process has shortened, right? Typically, everyone thinks that you just talk to an investor and a check gets written. That's not how it happens. If it does, congratulations. Feel free to tell us, and we will happily put you on air to talk all about it, because I would love to hear that story. Typically, the way it works, to William's point, is it's a journey. No shortness in the word. It takes a lot of time, whether you're raising for a company, whether you're raising for an idea or a fund to invest in other companies. This stuff takes time. It can take 3 to 6 to 12 plus months to put those types of things together. And even those investors, or excuse me, even those entrepreneurs who have raised capital and are growing in their capital fundraising efforts, it still takes time. It always takes time. Plan for that in your business. If you think otherwise, you've been validated here. Plan it. All right, guys, I want to come to you on now we've got the kind of landscape and what's happening. What's going to happen in the next 12 to 18 months? Are we going to see a funding boom, bust? Are we going to see a crazy amount and a gold rush of M&A activity? And Saeed, I want to come down and start with you first. As you mentioned a little bit about the kind of gold rush there is right now on both sides, entrepreneurs and investors, for both fundraising and getting investment. For the next year and a half ahead, as things have accelerated, here's the context. 6 to 8 months, things have accelerated, digitized faster, arguably, than the past 10 years. So with that, we're not slowing down. We're going to speed up. So in the next year and a half, investors, what are you seeing happening? Boom, bust, M&A crazy town. What do you see as your prediction going through? And then we're going to come back to areas of opportunity next. But Saeed, let's start with you.
Sure, thanks. So obviously the most important question is when is the vaccine, right? So I mean, I don't know whether you've seen it, but we keep talking about V recovery, W recovery. And yesterday, I think Financial Times came out with K recovery. So basically
it's because I was hosting the show today. It was for the Kyle. It's okay.
Exactly.
Very rarely do I take credit for something, and I'm going to take credit for that. So
now even that format has been taken. So the reason is that they're saying that in societies there'll be two group of people who are basically it's like an upper vertical. So they're enjoying this whole situation, like a lot of money, as you can see, and then there is another group of people who are going down. So the recovery, or whatever we call it, is basically different for two groups of people in society. And I think we can actually impose this idea to companies also. So in a long enough time frame, if you're talking about 8 months or a year, or maybe even 18 months, assuming the vaccine goes in, there is no second surge, or it's broadly contained, and economy sort of starts slowly coming back to where it is. The acceleration that we have been seeing happening on the tech adoption will continue, because it's sort of like no going back, and that's what's happening in ed tech, in health tech, in many other cases where the behavior change has always been a challenge, and this has sort of pushed that behavior change and adoption rate. So I don't see any slowdown to those companies. They will go through an accelerated phase of investments, growth, and a boom will happen. The past, of course, the companies that we see, whether Brooks Brothers or any other companies that are going for bankruptcy, this is not happening overnight. So there are issues of the number of outlets. So this was already happening, and the COVID-19 just accelerated that thing, right? So if this sort of slow economy continues for another 7-8 months, we'll see more and more of those liquidation or bankruptcy coming in. I think there will be less on the tech side, of course, unless you are into travels and all those very extremely impacted space. In most cases, I don't see a significant. Most of the cases I see it's a boom, but on the real, on high street, as we call it, there may be a lot of bust coming in. The general consensus from economists and others, even if a vaccine comes in, to get vaccinated would be at least 1.5 years from now. To reach a good enough population so that it does not transmit, right? So we're talking about anywhere between 60 to 80%, and that will take 1.5 years or maybe longer. And if we talk globally, it may take longer. So I don't see economic recovery happening anytime soon. It will be a slow recovery, and with that context, I believe it's going to be K.
Saeed, you're welcome on the show anytime. I love it. But no, I agree. And I think from my perspective, I'm seeing some similar activities. And, Gary, I want to come to you, boom, bust, M&A gold rush. What do you see happening in your thoughts over the next 12 to 18 months?
Yes. So I'm with Saeed in terms of this. I see, so people are getting used to it. They're starting to understand, the investors are starting to understand that they need to do things differently. And as I've talked about on many different shows about the digital transformation, this is all going to happen. Some of these brick and mortar companies, these retail companies were just hanging on, and this has just pushed them over the edge. But I got a interesting story. So I have two local restaurants that are the same Chinese restaurants that I go to here in Palm Beach, and I went into the one Chinese restaurant, and he said, "I'm not going to do this. I don't want to be caught in this pandemic." I went to the other Chinese restaurant who I know, and I went to the owner. He said, "I'm staying open." He said his business is booming his takeout business. So he actually doubled his business during the pandemic. So part of it is, you got to control your fear, and you got to understand that there are opportunities. So I talk about the glasses being half full. I think it's important. And I think the next 12 to 18 months, these companies that assist in the digital transformation are now just going to not be, country specific. It truly will be going global. Mm-hmm. And that's where we're going to see more investors crossing borders than as Saeed is doing today, than we've ever seen before. It's going to be unprecedented, and it'll bring the world together. It's a new structure that's being built right at this moment. and connectivity and a network.
Absolutely. Mohammed, to you, any thoughts to add? And then, guys, I want to come around for our lightning round with a few questions for each of you. So, Mohammed, what are you seeing in the next 12 to 18? Boom, bust, M&A gold rush? What are you seeing?
Awesome. Well, yeah, I think there is a need not to overestimate the pandemic long-term, I would say, investment effect on the global investment area, right? Because actually, as we speak right now, there are some businesses which more or less were more or depending on the pandemic, so they are generating more money. But right now, after people went out and the economy is sort of recovering, there is kind of different customer behavior. Some are adapting to the new area, new way of living, where they shop online and they do the online education and so on and so forth. But there are different or there is a different sector where people are going back to normal. They are trying the things that they have been doing before. Some companies are actually more or less going into bankruptcy, especially in the tourism and the travel sectors. But I can't doubt that they will be having some boom after the pandemic is over. So this is a really huge sector which might be underestimated right now during the whole situation. I think what paid a lot into the due diligence time is the need for catching the opportunity, not just the situation and the techniques where people are doing the due diligence, but they need to catch the opportunity. And there was a shortening of the due diligence. That might unfortunately be longer afterwards, but if you choose your sector right and your investor right, I think that time would be more or less shorter than before, but longer than the due diligence that we are doing at the current stage.
And that's not a bad thing, right? We've also mentioned that due diligence process is going to be longer. I mean, look, this is a relationship building, a relationship development process for either side, investor or entrepreneur. And especially now as we are more digitally connected versus physically connected, on the digital side, it's going to be longer. But again, this is okay because these are the investors that are going to be with you through the bad and the good and the very ugly times of business as it grows. And seeing how they're asking questions, having yourself prepared with those documents or those pieces, it's just a part of the puzzle. It's a part of the game that you both want to have. And again, if an investor is asking a lot of those questions, trying to do the work, which Saeed, I've got a question for you around this, that's a good thing. It means that they're invested. It means they want to make sure you have all your ducks in the row, not just that they do, so that the company can grow to be successful, whether that's to, into the public markets, whether that's being acquired or something else otherwise. But we are here in the lightning round, and I've got a question for each of you. But first and foremost, areas of opportunity. We've talked a lot about where things are going, but what is maybe one or two industries you see over the next year that's just going to be a huge area of an opportunity, whether it's for investors or for entrepreneurs building? Gary, you can't say artificial intelligence because that's your favorite, but anything else is fair game, because I'll say it for you, AI, no doubt, blockchain, no doubt. Everything else is fair game. William, let's start with you. One or two areas of opportunity industry-wise that you see as a great potential in the next 12 months.
Right. If you ask me, for the last 3 months, in Malaysia in particular, there's one industry called the glove industry. Okay, it just went crazy. Okay, everybody is talking about it. My school group chat is talking about it. My wife, who never invest in any stock, actually asked me, did I invest in any glove companies? So there's about 5 glove companies in the Malaysia listed Malaysia exchange. And last week, I even saw a news, articles that say that Malaysia Malaysia market cap is almost nearing Singapore exchange market cap because of that, a few of that so-called rubber company. So back to basic, right? In the rubber industry is a primary industry for Malaysia for a very long time. Nobody even look at it, okay? There's one particular company called Supermax. Before COVID, it's 1 ringgit 20 cents. Now it's almost 20 ringgit. All right, all right, and they say it might goes to 50 ringgit. Okay, there's another company, the number one company called Top Glove. They do the share split because the share has become so expensive. Okay, and to give you a perspective, all right, it used to be a normal glove company used to trade at 7 times, 5 to 8 times max. One of them is trading at 190 times PE.
Wow.
Okay, so if you ask me, can AI fetch that? I say can't. So it's mind-boggling, right? Because when everyone is talking about the share market or that few particular stock, and it's just another not bubble, right? It's such a huge bubble. So if you ask me where to invest money, everybody is doing that direction. Of course, I'm more interested to know who are the ones who make from 1 ringgit, okay, all the way to that 20 ringgit mark, right? But if you look at
like back to basics. So for those, and apologies to cut you off, William, we're just short on time, so I'll make sure everyone gets an answer. But from William's, just a quick summary, back to basics. People are looking back at materials, looking at raw materials, how those play a role in all products. So there's that for you. Gary, 1 or 2 areas quickly of opportunity.
Yeah, I mean, the area that's really interesting for me is remote workforce management. So now we've got to go down through and we've got to understand how we manage the people correctly, how we set up a nurturing environment for them and maintain the productivity. You know, let's do that. Our business in Yva, the company that I co-founded, our inbound interest was up 38% at the beginning of COVID. I mean, it's just going through the roof. So we've got to do more of that. How do we treat people? It was going to happen anyhow. Now let's go down through and how do we work with managers? How do managers work with their employees? How do the employees work with the customers, all in a remote setting? And at the same time, privacy, security are paramount importance.
Yeah, throw mental health in that as well, right? You've got a whole new paradigm that needs to be rethought, but also as we're shifting, and maybe some of us will transition back, some of us may not, right, in the remote area, but because we are so distributed, having that area of mental health and mental well-being will be also important as well. Noble, I've left you silent, and I apologize for a little too long than normal.
I'm learning. Listen, whenever I'm quiet, I'm learning, right? God gave us one mouth, 2 ears.
I love it.
So at the end of the day, there's a couple of industries that are really we're very focused on. You know, Dr. Fauci is coming out and saying that there's no end in sight in the U.S. for this. And so contactless delivery, we're completely sold on. That's why we've been helping Basel Street very aggressively. We're happy their pilot program is. So the fact that they're delivering food from a machine that doesn't require other people to touch it is huge. And that's why they've gone through 2 rounds. They raised 15 million, and we expect to raise another 20 million for them. So that's really a space that we like because everyone needs to eat, and food and contactless is going to be it for quite some time, actually. The other part is my wife is a mental health professional. And so telehealth in the mental health care field is exploding. So dealing with people's anxiety, agoraphobia, the like, you know, we always talk about telemedicine from a simple doctor-patient, you know, I broke my arm, I'm hurt, I'm sick. But in the space of helping people mentally with anxiety, drug addiction, the like, telehealth is exploding in the therapeutic sense, because before you'd actually sit down and deal with the patients and interact. Now that's pushed them over into the telehealth field, and the insurance companies are supporting it in an aggressive way. So that field, even in and of itself, is a huge growth field of people coming in who are MFTs, marriage family therapists, which is a huge issue here in the U.S. A lot of people getting divorces or having marital problems and being around each other 24 hours a day. So
happened in Asia. That was one of the biggest. It was one of the biggest headlines out of China, the amount of divorce rate that just surged. Side topic, but just something in our
but that's my point. So if I were to focus in two areas, if you're going to telemedicine, look at mental health, telehealth, and definitely contact delivery of food, in addition to AR, VR, blockchain, blah, blah, blah.
Mohammed, to you, my friend, what do you
Yes.
see as areas of opportunity?
Absolutely. Thank you. Well, I think there will be a steady increase in the investment of the sectors that investors already invested in during the pandemic. And in comparison, there will be sharp increase in the investment in the sectors where the industry or the companies affected mostly from the pandemic, because they are trying to rejuvenate, if you will, trying to rebuild their ecosystem. Maybe some businesses were not doing well actually in their business model, and they are trying to redesign their business model. They are trying to rebuild the whole system. They are trying to go more tech enabled and maybe trying new markets. So I think that might be the behavior of the both investment as well as the invested in sectors.
Absolutely agree. And Saeed, I want to come to you last, and I got a follow-up question, but what are you seeing as areas of opportunity?
I think too. So, right. So, I mean, all the things that is driving like, AI or the telehealth or anything, so the guys who are serving the pick and shovel, i.e. clouds, cloud services and all those, security of that. So clearly they're throwing the pick and shovel to all these guys who are going to boom. So there will be a good year. The other area, which I usually don't come into these discussions, is where I think there will be a boom, is vertical farming. So the reason I say vertical farming is because I think if this COVID-19 or this shows us one thing is the disruption of supply chain. Right? So I think there will be a more and more bias towards having better control of the supply within the localities, and that will probably push all this vertical farming. And we are seeing some good growth in that space. A lot of investments are going on in that space. So this is not a very common one, but I thought I'd put it out there.
Throwing the curveball. I like it. And with that, I do have a question specific for you. Is you mentioned you've invested in about 12 unicorns. If you can, give us a lesson learned in investing in those companies. What really was it that you saw when you made the investment that the company could become a unicorn?
Luck. Pure luck.
That's perfect. You don't even have to expand on it. That's perfect. Luck, timing, and luck.
Yeah, I mean, so one of the things that one realizes as one becomes an investor is that, I mean, you can do all the analysis. You can, obviously you do all, right? When you're putting money, you obviously look at the founders, you look at, you have a hypothesis, and unless there is something, like COVID and something which out of blue comes in, you basically have a very decent hypothesis of where the world will be. And then with everything going right, even then the companies fail, for reasons beyond completely out of control. So it's very, so ultimately there has to be some element of luck to make that to $1 billion. But in general, I mean, the few ones that I've seen, obviously they were in the right place. So one company which is called Snyk, SNYK. So they do, cybersecurity on the open, for all the open platform work that's going on. So they provide the security on that. So that's obviously going big. The other is called Rappi, which is doing in Colombia. It's one of the, it's probably the largest unicorn out of LATAM. They I think now valued at 7 billion. So, so they do all these deliveries and stuff. So they're obviously doing quite good. So, so I mean, if you look at the companies that invested, they had been in the right place. Of course, they had all the executions and obviously the founders were good, like Gary was saying, that they stacked the company well from beginning. So that also helped. But of course, there is this element which I don't think anyone should ignore.
It's good. I mean, sometimes people just, that's a good, honest answer. It's true. I mean, luck and timing, right? Right place, right time, and luck. You've stacked the deck, as Gary put it, along the way correctly, and it's worked out in all of your favor as well. So, absolutely great. And guys, I want to come around for our very last question as we reach the top of the hour. It's Friday. Mohammed's got an entire weekend to celebrate and should enjoy time with friends and family. outside of just us as his friends as well. So we'll come here to wrap. And also William on the other side of the world, along with Saeed, need to get to sleep. So here's the lightning round. Piece of advice you would leave entrepreneurs and investors with as they look towards the next 12 months. We've talked a lot about diligence. We've talked about fundraising. We've talked about industries. We've talked about regions. All that summed up, one piece of advice you'd give back to those listening today to ready themselves. And they'll figure out where to reach out to you. We'll get to that next. But just one piece of advice that they can really take home to get themselves prepared. Noble, I saw you unmute first. Sorry, Mohammed, he beat you to it. Noble, go ahead. One piece of advice.
Saeed said it best. Follow your gut. It is luck at the end of the day. So you have to do all your best diligence, but your gut will lead you in the right direction. So just follow your gut.
There you go. William.
Yeah, for entrepreneurs, it's quite simple. Just speak to as many investors as you could. Get help. Always ask for help. And for investors, well, we have to take calculated risks, okay? But we have to deploy capital as well. Yep. That's
great.
Yeah, so I would say, when you're building your company, make sure you have somebody that is opposite of yourself. So if you got a great marketing person, you want to have somebody that's a technology person. And, I call it the rule of threes again. If you got somebody in there for operations, CFO type, that's really good too. And look for that, because that diversity will give you different ways to look at your business and help you build it better.
Absolutely. Mohammed.
Yeah. Make sure you have solid reasons for investors to invest in your company. It's different for different countries, of course, and different for different investors, because usually we might have some kind of ideal image about the ideal entrepreneur and the ideal company. But to make sure you have growth, marketplace, team, the team is good. You have the company is generating jobs, and of course aligned with the UN SDG goals.
Saeed.
So, so for the next 12 months, I think for entrepreneurs, investors, if you have been following all the news from WHO and everything, we still don't know what we are into, right? So the news keeps changing. So it's this whole thing, so the hope for the best, but prepare for the worst. We still don't know. And, the downside of being pessimistic is less than the downside of being optimistic. So they have to be prepared for the worst.
There you go. Audience, you've heard it from some of the best. Listen to these, go rewind, re-listen a few times over through the weekend. This is great advice from great investors who know what they're talking about, who've made great investments, have learned some lessons in all of our time. But this is the advice you need looking towards the next 12 months. Gentlemen, let's go ahead and wrap it up. Where can everyone find you online to continue the conversation and to get connected further? Saeed, I'm going to start with you since you were the last to go. Where can everyone find not just yourself, but also potentially your syndicate as well, if they're interested in learning more?
So I'm in LinkedIn, Twitter, Twitter at Sajid Republic, and LinkedIn, of course, Sajid Rahman, they can click and find out. So I'm quite available online, so connect me there. And then, my syndicate is on a platform, so Angel is on a platform, so we can take
Perfect. Thank you so much for joining today. William, to you, where can everyone find you online?
Yeah, you can find me on LinkedIn or Facebook. It's under William Du, right? So if you see a lion face, that's me. If you see an Asian face, that's me, right? Okay.
To our audience, take that as a note on the Facebook part. William has said another social network outside of LinkedIn, which means he's open to connecting on other social media. Take note of this. Reach out. Don't be afraid. It's not a cold reach out. It's a lukewarm one, because he's giving you the opportunity. All right. And Noble, where can everyone find you online? And the accelerator as well. I feel like we need to plug that. So where can everyone find you?
Yeah. Okay. So find me online. I'll say my Twitter handle first, at Dracone, which is my last name. It's DRAKOLN. I've now been open up to Twitter more. It's also easy to find me on LinkedIn, Noble Dracone at LinkedIn. And then the accelerator is the letter M, the word accelerator. And instead of .com, it's .la. So maccelerator.la, and check us out there and submit proposals and reach out to me. And like Kyle said, it's a lukewarm introduction. So I'm always happy to talk to people and see how we can help and what stage they're at.
Wonderful. And to that point, just a quick note before Gary and Mohammed go here. Some of the things mentioned today, articles, links, as Noble just dropped, I'll put in the show notes afterwards. So it's okay if you missed it. It'll be in the comments. Gary, to you, where can everyone find the Grand Master, the Grand Jedi, the Yoda?
Oh my God, I feel like I'm in Star Wars or something, you know?
It's Friday.
Where's George Lucas when I need him? Anyhow, you can reach me, Gary Fowler, on LinkedIn is the best. Gary at gsdbs.com. I have a show every week. Gary's Picks. I mean, I'm all over the place. So wherever you can connect with me, love to hear from you. Whatever I can do to help, stay positive. We'll get it.
And get shit done.
And we'll get shit done.
There you go. Mohammed, my friend. Again,
thank you so much.
Happy holidays, and please close us out with where everyone can find you and the company.
Which company?
The one you're currently representing.
Yeah, sure, absolutely. Well, you can find me on LinkedIn, of course, Muhammad Al Majid, and the company Rancher, also on LinkedIn. And very happy Friday to everybody, and of course, happy Eid for everybody.
Wonderful. Gentlemen, thank you so very much for taking the time today, especially on a Friday, late night, early day, mid-afternoon, wherever you may be in the world today. We greatly appreciate your insights and your thoughts. To your audience, thank you so much for tuning in. If you like what you heard, click subscribe, give us a thumbs up. Do reach out if you'd like to see other content or you like what you heard today. Thank you, Mohammed. We'd love to hear from you. Thank you, Gary. We'd love to also, William, thank you. We'd love to have you here on the show. Thank you, Saeed. We'd love to have you here on the show and hear your thoughts and have you share with the audience. Entrepreneurs, love to have you come on the show, pitch us as investors, share your idea and insights with us as well. A big shout out to Elena and to the entire LA Token team for making VCTV possible. I'm Kyle Ellicott, your host. You can find me on all social networks at Kyle Ellicott, similar to Noble on Twitter. And we'll be back here next week talking about all kinds of industries, from fintech and blockchain, my personal favorite, to gaming, to electronics, AR, VR, Nobles. We're going to be talking about transportation, consumer electronics, and a few other industries as well. So join us here next week on VCTV as we have a packed week for you. Everyone have a great